Hi, it's Marc Champ here from Wharf Financial. Thanks for tuning into the Wharf Academy. Today I'm joined by Simon King, who works in our commercial finance, looking at all things trading business for us. So, hi Simon, how are you?
I'm very good, thanks Mark. How are you?
Very good, thank you. As you probably can see, I'm in the Channel Islands at the moment, talking to some lenders. Are you anywhere so glamorous?
I'm in Chatham, which isn't far from the sea, which is also not far from the sea, being a historic dockyard, known for its historic dockyard where the HMS Victory was built, I believe. So also maritime, yes, yeah. Good,
excellent. So for those of you who don't know, Simon has joined Wharf and he is heading up our trade finance arm, looking at everything with regards to trade finance, commercial finance, and using his vast experience and many years of knowledge that he's gained at Lloyds. So do you want to give us a bit about your background, Simon?
Oh, well, it's not very exciting. 41 years at Lloyds Bank. Obviously, as you mentioned, a lot of trade. I was in SME commercial. My specialism actually was looking after overseas-based companies expanding into the UK. So a lot of that was from North America. And I was lucky enough to visit Silicon Valley on many occasions and work with some very exciting, fast-growing companies. So here I am at Wharf, ready to help companies who want to be exciting and fast-growing, or just not so exciting but growing.
Excellent. And so your background and your experience, you think you can help other customers benefit from that and expand in their chosen field?
Yeah, absolutely. I like to think so. As I said, one thing a lot of my clients had in common was when they came into the UK, they would be new, they would be small, but they had a vision, they had a willpower, they had a drive, and they had the knowledge to grow their business. So a lot of the products that we use for them, I think are still fitting. Well, they are still fitting for a lot of the clients we have at Wharf, Mark. As you know, we have clients who are very keen to grow their business, and that's what we're keen on doing, on helping them succeed.
And can it be any industry, or are there particular sectors that you would look at?
We look at all industries across the trading network. Some of the products we do are particularly well suited to some particular sectors. If you take a recruitment agency, for example, a recruitment agency will have to make a weekly payroll every Friday, but might not get paid by its client for 30, 45, 60 days, and that can create a funding gap. So really anything where there's a funding gap, where a company has provided a service and is waiting to be paid, that's where we can really help. And when we do that, when we find the ability to unlock some cash for them, unlock some resources, that can provide them with the opportunity to fund growth, to be able to finance some new business that they otherwise wouldn't have had the wherewithal to do.
Okay, so you mentioned the funding gap there, and it's also known as, I suppose, as the trade cycle. Could you perhaps explain what that is to the people watching, and let them know what products can help them manage that need?
Yeah, I mean, it's a bit like working capital is a bit like, I call it petrol in your car. You always need access to funding just to make your business run. Whatever it is that you're doing, you've got costs the whole time. So just like when you're driving your car along the motorway, you need to make sure you've got enough petrol. When you're managing a business, you need to make sure you've got enough cash in the bank. And sometimes when you haven't got enough cash in the bank, you need to be able to understand how to stock that up. So a business will need a set amount of funds to work for, let's say, 30 days to pay its bills, to pay its employees, to do whatever it does, brew award-winning beer. And then at the end of that cycle, the company is ready to sell its product and maybe wait another 30 days to get paid. So it's that funding gap while we're having to finance the operation and the production of goods. It's all about financing that and making sure that the company has got sufficient collateral to carry on working whilst it's waiting to get paid. Of course, once it does get paid, fills up the petrol tank again, and it's ready to go. But it's all about keeping that working capital topped up so that the company can perform smoothly and seize any opportunities that it may be able to win.
Okay, so historically, I think people would have looked to an overdraft perhaps to fund that type of that funding gap. What are people looking at now? What's the most common way and the most efficient way for people to do it?
Well, invoice discounting is increasingly popular, Mark, and there's a number of reasons for that. So invoice discounting basically unlocks the cash that's tied up in a company's debtor book. It might have a debtor book of 100 clients all owing it, I don't know, £10,000, whatever it is. But the company is frustrated because it has to wait for that money to come in before it can go again, before the cycle spins, and it's got the money to produce its goods. So it's all about unlocking the cash for the company, right, to help it do that. So whereas you talk about an overdraft facility, you can do that with an overdraft facility. The banks, especially in difficult times, can get nervous about overdraft facilities because the banks don't know what's going on. All they know is that they have granted an overdraft facility and it is maybe near its limit, it may be in excess of its limit. The bank has no idea. If the bank is funding advances against invoices, the bank has complete visibility and is therefore much more relaxed, shall we say, much more open to cooperate with a company because the bank can see what's going on. And that means that can lead to lots of benefits. It means banks will typically ask the directors of a company to personally guarantee their company's borrowing, because why shouldn't people take responsibility for their actions is what the bank will argue. So a bank will want a personal guarantee, but the bank might not want such a large personal guarantee if it's doing an invoice discounting facility, because it has more visibility, because it has more focus on what's happening. So typically you can do an invoice discounting facility with personal guarantee for 20% of the limit. An overdraft facility might be 100%. So it's a facility that is typically easier to get put in place by the lenders.
Okay, so you've got your invoice discounting and the trade finance in place that you need. Your business expands. How does the invoice discounting work? Does it grow with you, or is it?
Very good question. Yes,
it
does. It does grow with you, because the more invoices you've issued, the more you're able to draw down against those invoices. Good point, Mark. Let's say if you had a standard overdraft facility, I don't know, £100,000, as your business grows, the working capital requirement grows, and the overdraft limit all of a sudden runs out. You're going through the ceiling of your overdraft facility. You're having to go back cap in hand to your bank manager and say, please, can we have more? Whereas with the invoice discounting facility, it's against the invoices. Okay, the bank will always have to agree to extend its exposure, to increase its exposure, but it's much more likely to be able to agree to that because it has visibility. Okay,
so the process, once you've got it in place, is less cumbersome, I would say, than an overdraft, where if you need to get it extended, you'd have to keep applying and going back, giving more security. Would you agree with that?
Yeah, absolutely right. And it's typically we get these things sanctioned faster with a bank than with an overdraft facility. And of course, the other side of it as well, it's a good marketing tool. So if you're looking to put on a new customer and that customer is going to be valuable for you, and your normal terms of payment are 30 days, you might be looking to sign this big deal, and this customer says, do you know what, I want 60 days credit. Now that's going to present you with a headache if you're just using an overdraft facility. But if you're using an invoice discounting facility, you just draw down the finance against the invoice. Yeah, you're going to be paying an extra 30 days, but nevertheless you are very easily able to obtain finance against that invoice. Makes it easier for you to extend facilities to your client, which makes you more attractive.
Okay, so the cash gets in your back pocket quicker than it would normally do so. I presume that cash can therefore be used to invest in your business and go and get new orders, etc.
That's exactly the point, Mark, and exactly what it should be used for. I once, years ago, I once provided one of these facilities to a client who came back to me a few weeks later complaining that it wasn't helping his business. And I commented that he had a very nice suntan, and he mentioned he'd just come back from 4 weeks in the Caribbean. So the point is, the facility needs to be used, needs to be invested in the business, and it needs to be invested properly. It needs to be used at its optimum. The facility should be used to grow the business. Okay, so it can help you out of a sticky situation if you have tax arrears that need to be settled. If you have a supplier who's overdue, is breathing down your neck, it's great for that. But if you want to use it to its optimum, then you use the invoice discounting to fund an opportunity for growth that you otherwise might not have had.
Okay, and can it be used by new businesses, or is it exclusively for existing companies that have been established for a long time?
Typically, you need to have been established, I'd say, for at least 12 months to use invoice discounting, but there are lenders who will provide what's known as account receivable finance to startups. But those ones, it's slightly different. It's something called factoring, and with factoring, the bank will want the whole sales ledger, and it will want the company to put everything through the bank. The customer doesn't have to draw down every invoice, doesn't have to finance every invoice, but everything has to go through the bank. Typically, the reason for that being, on a new startup, the bank wants absolute visibility, wants absolute control over everything. With invoice discounting, there is more control. It's a more sophisticated instrument where it's up to the client to decide exactly what he or she wants to draw funds against.
Okay, so can any sector do invoice discounting, or is it actually more suitable for certain sectors?
Yeah, it needs to be something where it's easy to prove that the work has been done. So recruitment agencies, logistics, freight companies, stuff like that. If you were providing consulting services to me, Mark, then there could be an argument about whether I received value for the money or not. So as long as it's something that you can issue an invoice for, if you can say delivery of 5 tons of coal, fantastic, because it's very easy to prove that you did that, as opposed to gave me some good advice about some investment.
Okay, so is it just domestic companies, or can international companies also use this?
Certainly it can be used internationally, and it can be very powerful internationally, especially because if you are selling your goods abroad, you really don't know the credit standing. You may well not know the credit standing of some of the companies that you're dealing with, and it can be obviously very difficult to take recovery action if you run into difficulties. And on that, actually, invoice discounting can work very, very well indeed with trade finance, which is, as you know, is the finance of international trade, which is what makes the world go around. It's again, that's something we are increasingly working on. I'm working on a deal just at the moment, actually, with a fairly new company which needs to import electronic components from China, and they have already got themselves a working capital issue, because they basically have to pay for the electronics at least 3 months before they themselves will be paid by the end user. Now, with our trade finance solution, the beauty of the trade finance solution is that the bank says, okay, the risk of this transaction is not against you, the customer, the risk is against the end user, who happens to be a very large company. And that means that the lender who's providing the trade finance solution, A, has comfort that they're dealing with a large company. Doesn't matter that our client is only a modest-sized, fairly new startup, reasonably new startup company. The bank has comfort that the end user is a big company. The bank has comfort that they will only have to pay out the letter of credit if the Chinese bank perform exactly to the requirements specified under the letter of credit, including insurance of goods and stuff like that. And as for the company itself, our client, is just facilitating the transaction. That means they can do multiple transactions without exhausting their own credit facilities. And also, importantly, the directors won't have to issue, or should not have to issue, large personal guarantees, because the risk is on the end user, not on their company. So trade finance is something we're working hard on. And as I mentioned, we call trade finance pre-shipment finance. We're financing the production and the import of the goods, in this case from China. Invoice discounting that we talked about in this case would be post-shipment finance. So the goods land in Felixstowe, land in the UK. They're then provided to the customer, an invoice is issued, and then we move on to post-shipment finance, which is invoice discounting. When you put the two things together, it can be very powerful. And one thing I like is that the only entries that will move over the company's bank account are the credits from the sales proceeds of the transactions. So it can be a really useful product.
Yeah, it sounds that there's a type of finance for both sides of the transaction, and the ability to grow with it is there, and the cost savings that you can make, or the cash that you can free up is there to be able to expand your business. So if people want to find out more about this, how can they get hold of you?
They can get hold of me through the Wolf Financial website. They can get hold of me through by scanning my QR code on the sleeve there, Mark, or they can just give me a call.
Excellent, good. So if you're interested in trade finance or invoice discounting, please get hold of Simon at wolffinancial.co.uk, or you can go straight to our website and find all the contact details. So thank you very much, Simon, for the talk today. Really appreciate it, and I hope you have a good rest of the day. Thank you very much.
Enjoy the rest of your trip. Thank you very much.
I'll do my best. Thanks a lot.